Hello everyone and welcome to today's session. So today we are going to continue unit number 2 of chapter 14 and then we will shift to the unit number 1. Okay, there are certain points that are remaining that we need to discuss in unit 2 and then we'll shift to unit 1. But before I proceed with respect to the unit 2, just a quick recap of the things, and I'll ask few questions to you guys. Okay, and I want answers so that I can understand whether you guys have referred to the chapter that we discussed in the last session, or have you read the chapter or not. Okay, so quickly, can anyone tell me the types of layers that are there under scale based regulation for the NBFCs? Types of layer under scale based regulation. Yes, Ginny, very good. Can you name them? Yes. Very good. Base layer, middle layer, upper layer. Yes. And top layer. Very good. Very good. Now, which NBFCs are required to be classified or will go under the top layer? So, which NBFCs will go under the top layer category? Anyone? So usually the top layer, as discussed in the last session also, with respect to the top layer, it's, it usually remains empty. Okay. If there is a higher risk NBFC, then from the upper layer, it will be shifted to the top layer. Okay. So top layer usually remains empty, but if there is a high risk, then some of the NBFC which has high risk will be shifted from the upper layer to the top layer. Okay. Now coming back to the NPA classifications and the provisioning requirement. Can anyone tell me what is the NPA classification or the days for classifying a particular asset as a non-performing asset when there is an overdue? So for base layer, what is that particular date? Number of days basically to classify a particular asset as a non-performing asset. I want the number of days for a base layer. Quickly. So the number of days that, okay, very good, Ginny. Yes, very good. So up to 31/3/2025, it is 120 days. Remember the glide path that we discussed, 120 days as of now, and by the end of 2026, we have to bring it back to 90 days. Remember this chart that we discussed, this timeline? Okay. So by the end of 2026, everything will be at the 90th day. And then we discussed about the provisioning requirements. We discussed about the various things. Clear? I hope you guys have revised the topic. You have read the chapter. That is very much important. Any doubts anyone has with respect to this chapter? Any doubts? No? No doubts? No issues. Okay. So I just want to discuss few more points when it comes to the NBFC. Okay. We have discussed a lot of things with respect to the prudential norms. We have discussed with respect to the reporting part. I have shown you the reporting. We discussed the auditor specific report also. But apart from that, there are a few things that I want to discuss. Number one, about reporting on the fraud. Okay. So there is a fraud reporting requirement with respect to the NBFC. Now there is a particular classification of frauds by NBFC. Okay. Now what these classifications are, basically NBFC has to classify, okay, the types of fraud that are happening into a particular category, and then on the basis of that category they have to report it to the RBI. Okay. It's not that much difficult, very straightforward classification is there, and they have to, identify that, okay, whether which kind of fraud it is, which kind of irregularity it is, and then accordingly they have to report it to the RBI. So quickly we will go to the study material. Let's come to the page number 14.104. Okay, so you have a classification of fraud by the NBFC in a particular category. So these are the categories: misappropriation and criminal breach of trust, fraudulent encashment, unauthorized credit facilities, negligence and cash shortages, cheating and forgery, irregularities in foreign exchange, another type of frauds. So if if there are these frauds, then the NBFC has to classify the frauds in these categories, and they have to report them. Okay. Now, when it comes to the fraud with respect to the NBFC, there is, there was recent requirement by the RBI with respect to having a particular framework for fraud monitoring. Okay. So recently, RBI also, required NBFC that you should implement a framework to monitor the fraud. That was basically a master direction on the fraud risk management in the NBFC. Now, what is this fraud risk management basically? It's fraud risk management is nothing but it's a framework, or you can say some guidelines that has been given by the RBI to the NBFC that, okay, you should follow when in your organization, in your NBFC, that whenever a fraud happens, this should happen. From starting from having a policy around the fraud, okay, how the board should have a policy around the fraud management, fraud risk management rather, okay, how fraud should be investigated in a particular entity or particular NBFC, that when they are identified, okay, what is the role basically when it comes to the identification of frauds. Sometimes having a policy or a system to identify early warnings or for the detection of the frauds. Okay, it may be with credit facilities, it may be with the loans. Remember, we discussed about SMA 0, SMA 1, SMA 2, special mention accounts. Yes or no? Now, early warning signals includes your SMA also, because sometimes early warning signals and SMA, they both are linked together to identify red flags and early flags for the fraud detection basically. Okay, and as an auditor, okay, as an auditor basically there is a reporting requirement. Now, auditor has to report basically the frauds if there are any identified, okay, to the, you can say, RBI also. So during the course of audit, if auditor comes across any instance where there has any possibility of a fraudulent transaction in a particular account or in a particular loan or in a particular scenario, now in that case, auditor is required to bring that fraud to the attention of audit committee. Okay, plus auditor has to make sure that auditor appropriately assess the fraud risk factor when it comes to the these type of transactions are there. So in case of NBFC, you can say fraud risk factors is can be at a higher stage compared to other type of industries. Let's say, for example, a particular industry is there, like services sector. Over there, you might not have that much high fraud risk factor or fraud risk assessment when it comes to the in comparison with NBFCs, because here in the financial sector you deal in the money, and that's why there are high chances of fraud. Okay, so fraud risk are also are always considered a very critical aspects when it comes to the audit of NBFC. Okay, so that was background about classification of fraud by NBFC, and role of auditor, and what NBFCs are required to do and what auditors are required to do. Okay, then the next part I want to discuss basically is about the core audit facility, core audit thing. See, we have discussed about reporting. We have discussed about prudential norms. I would discuss certain things on the auditing or the audit procedures that are basically followed when it comes to the audit of NBFC. Okay, so I will more discuss now on the auditing part, audit procedures. See, whatever we have understood till now, with when it comes to the fraud risk factors, when it comes to the prudential norms, when it comes to the net owned funds, when it comes to the reporting, our audit procedures are designed in such a way that first of all, your objective is to issue opinion and perform those reporting. Okay. Now, in order to perform those reportings and in order to issue the opinion, you have to perform audit procedures. Okay. Now, what happens is that when we do an audit of an NBFC, like all the, you can say, topics that we have studied till now, understanding the entity, materiality, audit procedures, confirmations, all those procedures do apply. It's not like that they don't apply here. They do apply in the similar fashion, the fashion in which we have seen till now. Let's say, for example, if you are doing an audit of NBFC, you will first start with the client's acceptance and continuance. You will check that whether you are able to perform that particular engagement. You will go for terms of engagement. Okay, you will comply with SA 210, 220. Okay, then you go for, okay, now I will do the understanding of the entity. I'll understand the entity, its environments, internal controls, SA 315. Then you design the audit procedures. Okay, then you perform the audit procedures. SA 330 will come into the picture of it when it comes to the designing the audit procedures in front of the risk. Okay, and then performance of the audit procedures, specific audit procedures, collection of the audit evidence, and everything in the similar fashion it will be there. There will be no difference with respect to those audit procedures, those audit terminal, those audit concepts that we have understood. But apart from that, there are some specific areas where we have to pay extra attention. Why and which are those areas? Number one is understanding the internal control system. See, why we need to understand the internal control system in case of an NBFC. See, if it is a middle layer NBFC or upper layer NBFC, there are, RBI directions or master circular, master directions are applicable to them. When it comes to the RBI directions, or you can say master directions or master circular, they specifically, require how the board of the NBFC should be there, how the board should work, how NBFC should work. Apart from the prudential norms with respect to accounting and financial aspects, there are other things also. For example, information technology framework for the NBFC. There is a specific master direction on information technology framework. Now that information technology framework master direction deals with a lot of things. For example, IT policy, IT governance, cyber security, business continuity plan, IT service or outsourcing, a lot of things are there. Okay. Now, in that case, when we are going to understand the internal control system, when we are going to check for the IT general controls, we have to pay attention to all these things. Apart from the financial thing, apart from your reporting part, whenever you go and whenever you want to evaluate internal control system, you have to go through the guidelines, you have to go through the master directions, what was required to be done with respect to an NBFC and what they have done. And it is not that much straightforward when it comes to analyzing the internal control system or understanding the business of an NBFC, because you can identify n number types of products. N products will be there, okay, with different credit rating agencies. So that's why it becomes very very important to understand how the business is structured, what are the basically different type of committees that are involved, okay, who plays what role, how the internal control system is structured. Okay, a lot of things are there, a lot of monitoring aspects are there. If I just show you some of the examples. Okay, I'll just show you, the same example that we were discussing yesterday. I'll show you some metrics for a particular company. Now, from here, you can identify the quantum and, then what amount of detail that we need to have when we are understanding the entity and its internal control. See, as of now, new locations and locations, as on 31st March, the locations that NBFC has, these many locations, they have applications to provide service. Okay, they have EMI cards, personal loans, credit cards, flexi loans, DSM receipts on air. Okay, again, there are insurance, investments, EMI cards acquired digitally. A lot of things are there. And each and every product that you are seeing over here, for example, EMI cards, for example, personal loans, they have a different regulation. There are different regulations for them. Okay, they are not, there is no standard regulation. Let's say this is the standard regulation which applies on all the products. No, each and every product has a different regulation. For example, credit cards, there is a master direction issued by the RBI on the issuance of the credit cards, co-branded credit cards. Okay, on personal loans, fixed rate loans, a lot of things are there. So when you are going to understand the entity, okay, you need to understand what products they provide, how the internal control systems are structured, and how they are ensuring that with the each and every disbursement, with the each and every asset being, or every loan given, they are compliant with the laws and regulations, with the frameworks, with the master direction, with the regulations, with everything. So you need to understand from that point of view, and for that you need to have a good understanding of their internal controls. The number of transactions can be very, very huge. Okay, if you're auditing upper layer NBFC, then just think of the number of transactions that can be there, and multiple type of transactions, multiple. Okay, from personal loan to the SME loans, to professional loans, to specific sector loans. I'm just talking about these loans. There are, again, other type of finances, other type of lendings, loans against securities, golds, deposits, schemes. Okay, a lot of things can be there. So in that case, and each and every particular product will have a separate division requires separate internal controls and everything. So you need to make sure that, okay, you understand the entity. You understand the entity, and plus you understand the internal controls, the IT environment which is there in the entity. Then only you will be able to take a step ahead, and then you will be able to perform risk assessment. Otherwise, it won't be a appropriate risk assessment over here. So, plus, there are other risks which are involved when it comes to the functioning of an NBFC. For example, credit risk. For example, liquidity risk, operational market risk, interest rate risk, sometimes debt management, how they are performing these functions. Okay. So you need to understand all these business processes which are there within the NBFC. Okay. How the NBFC is managing the liquidity, how the NBFC is, ensuring that they are having the required liquidity at all times to meet the demand, how the NBFC is working on the debt management part, whether they are obtaining the debt, whether they have a good structure of the debt portfolio, what about their, credit risk with respect to the loans and advances that they are given, how much NPA is there. Okay, who is monitoring the NPAs? What is the minimum, maximum level of NPA they have? How much security they hold? B2C lendings. A lot of things are there. A lot of things. There are multiple policies. I'll just show you something with respect to credit risk. Okay. Now, this is something which is already given in the public report, annual report. You can read it, but I'll just show you. Now, the company loan losses provision says this much CR versus this in this year. Okay. And if you see, bank holds a management and microeconomic overlay of 300 CR for this particular year for unforeseen risk. Plus, if you see over here that they have a guarantee cover for its portfolio, a lot of things are there that they have mentioned they have against the credit risk. Okay, so they are specifying that what they have against each and every particular product and what is their credit risk over here, how much provision they have taken. In that case, this kind of understanding is required. Then only the auditor will be able to understand what is the credit risk, where the risk of material misstatement lies. Okay. Any doubt till now in understanding this particular point? So evaluation of internal control is must. Then understanding of various directions, various norms is necessary. Then only you will be able to perform procedures. For example, if the NBFC was supposed to accept a particular amount of deposits, now whether the NBFC has accepted more deposits or not, you will be only able to identify when you are aware that what was that limit, what was that threshold, or when you are aware about, okay, there is some particular directions like NBFC acceptance of public deposit directions. So being aware about the directions, being aware about the requirements, and being aware about how the NBFCs work is very much necessary for you to perform the audit procedures. Otherwise, it won't be possible for you to perform. See, there could be n number of areas where you need to perform audit procedures. Okay. Compared to a particular, private limited company or compared to a limited company, NBFCs which are listed, so NBFC plus listed NBFC, they have a n number of disclosures. I'll just again take you back to the disclosures that are there in the financial statement. So I'll take you through some of the disclosures that are there, and then okay, we will discuss about like, okay, if these disclosures are there already, then you can see that behind each and every disclosure there should be a, audit procedures to understand whether the disclosure or presentation disclosure is appropriate or not. For example, so equity patterns and everything. So in this also, for example, you have a equities, okay, equity patterns, shareholders, shareholding patterns, reserves. So some is coming from your schedule 3 division 3, plus some is coming from your different regulations and different requirements. If you see over here, I'll just give you show you. Okay. Regulation, contingent liabilities. Now these were the different. Now over here, see, it is with respect to changes in capital asset and asset structure arising from Ind AS 7. So some specific with respect to Ind AS 7, Ind AS 24 related specific disclosure, okay, that is applicable to this particular entity. Now if I go in more detail, okay, you will find other different type of reportings. For example, over here, SEBI LODR, if that entity or NBFC is a listed entity, then LODR regarding your disclosures are there in the financial statements. Okay, so this is LODR related disclosures, everything, fair value, and a lot of things are there. Then if you go further, you may find some other master directions issued by the RBI under which they have the disclosures. Then you have a scale-based regulation disclosures. So there could be multiple kind of disclosures, multiple things that are reported in the financial statement, and you should be aware about these things. That okay, these are the disclosures that are required to be done. Tomorrow, if I just remove a particular, let's say, if I remove this particular disclosure from here, And if you are not aware about the ECL related disclosures, then you will never come to know that a particular section is missing. Okay. Tomorrow, let's say, for example, hypothetical example, I remove as a management, I remove this ECL sensitivity to future economic conditions. I remove this section. Would you be able to come to know that this section is missing in the presentation disclosure? Till the time you are not read or you are not understood what the ECL related disclosures are required in the financial statement. So understanding the disclosures are very much necessary. Understanding the requirements in case of an NBFC are at top level priority, you can say, which laws and regulations are applicable. Then to test those disclosures, you need to obtain audit information. You need to obtain the details from the particular management or whosoever it is. Okay, and accordingly, basically you will perform that particular testing. Okay, which may include your obtaining confirmations, which may include your obtaining list of newly open accounts, newly issued deposits, which may include verifying whether they are whether the deposits have the credit ratings or not. So all those things are involved in this only. I hope you guys understand with respect to the audit that okay, what is the critical point when it comes to the audit? Yes or no? Now tell me one thing quickly. Whether NBFC is required to comply with the or whether the auditor of the NBFC is required to report on the matters which are there in the Caro 2020. So is Caro applicable to NBFC? Is Caro applicable to NBFC? Yes or no? Come on, quickly. Is Caro applicable to NBFC? Easy question. We have discussed Caro. Okay. Very good, Jenny. Anyone else? Is Caro applicable to NBFC? Remember, when we were discussing Caro, we discussed about a particular exemption. That there are certain exemptions under the Caro. If I just revise it, that the exemptions which were there under the Caro, okay, they were something like this. Just a minute. Sorry. They were something like BIOS 8. Okay, that was basically BIOS 8 plus your private limited exemption. BIS is banking, insurance.
One company, small company.
Yeah. One person company, small company, and Section 8 company. And then you have the private limited exemptions. But nowhere there was an exemption to the NBFC. Yes, we do have an exemption to banks, but we don't have an exemption to NBFC. So NBFCs are required, or the auditor of the NBFCs are required to report on the matters which are there in the Caro. Okay, and we have already discussed the the matters which are there in the Caro in detail. So we'll not go against point by point related disclosures, but there are certain specific things that are there in the Caro which were applicable to NBFC specifically. There were certain specific paras. Do you remember that those paras were there in the NBFCs which were in the Caro which are specifically related to the NBFC? Can anyone tell me those that particular para number? There are particular two paragraphs which are applicable to NBFC. Anyone? No? 3, 3. Okay. Yes. Okay. Good, Jenny. What else? Any other paragraph? Okay. No issues. See, I'll go through the Caro again, and we will discuss some paragraphs of the para 3, some part of para 3 of Caro through the report only, so that we can have a good understanding of that. So this is again I'm taking from the example that on the public domain. Now see, remember, first was with respect to the physical assets, okay, and second was basically with respect to the inventories. Okay, this was fixed asset or physical asset, para 1, 3.1, or basically second was inventory. Now basically para 3, okay, was with respect to company making investments, company making company advancing loans and to various particular entities. Okay, is there any amount overdue, loans and advances related, para 3.3. So para 3.3 becomes very important when it comes to the NBFC, because if a NBFC is a deposit taking NBFC, if it's a NBFC is something is also taking deposit and lending, then para 3 is very important. Okay, why? Because para 3 talks about loans and advances, whether the company has provided loans and advances or no, or not, in the nature of loans or guarantees which are prejudicial to the interest of the company. Okay, what was the amount that was provided? Is there any overdue on the amount? So let's say, for example, here the total amount overdue, for more than 90 days, reasonable steps. Remember that we discussed in the session of Caro. So that this para becomes very important when it comes to the NBFC. Then there is a specific paragraph with respect to acceptance of deposit. Okay, so there was a paragraph with respect to acceptance of deposit, that is 3.5. Whether the company being whether the company has complied with section 73 to 76 or other relevant sections with respect to the acceptance of deposits, or whether any order has been passed by the company law board or tribunal against the company with respect to the deposits. So para 3.5 again talks about deposits. Then you have a statutory dues. It is similar to other paragraphs. Then it was loan taken by the company, loans and other borrowings. If the NBFC is accepting deposits and accepting loans, then there is a specific paragraph, that is whether the company has defaulted on the repayment of loans, whether the company is a willful defaulter. Remember on the part that we discussed about any default done by the company declared willful defaulter. Okay, whether the term loan availed by the company were applied for the purposes. So all this particular para 3.9 becomes very important again when it comes to the NBFC. Then there is a specific paragraph which talks about, is company required to get themselves registered under 45 IA. Okay, so para 16 basically is specific to NBFC, which talks about whether the company is required to get themselves registered under 45 IA. If yes, then they have obtained the certificate of registration, and whether they have performed the NBFC activities only after obtaining certificate of registration or not. Whether the company is a CIC. So CIC, there are more CICs in a particular group. So para 16 becomes very again important, a specific para to the NBFC. Specific to NBFCs. In entities which are not NBFC, they will say, okay, company is not an NBFC, hence this para is not applicable. But here for the NBFC, this becomes very important. Rest of the things, rest of the paras are similar that we have discussed, but these are certain paragraphs with respect to the Caro which are very important when it comes to the NBFC, because they in other companies you might not report anything in these paragraphs. They might not have, but in NBFCs you will always have to report. You will always have things to report over here. Clear with this? The applicability of the Caro and some specific paragraphs of the para 3 of Caro which are relevant or which are very important for the NBFCs. Any doubt with respect to this? Yes, no, any doubt? Okay. If no doubt, guys, this was the audit of NBFCs that we discussed in detail, okay, till now. If you guys have any doubt with the chapter, you can ask freely, please, and I would recommend everyone to ask. The more you will ask, the more you will learn. Now, we will shift to the unit 1. See, we have a very good base when it comes to the audit of NBFCs. Now, we know certain terminologies. Okay, we are aware about certain things like what is NPA, what is SMA 012 reporting. Okay, what are the provisioning norms, like categorization of assets, what are the liquidity requirements for the NBFC. When it comes to the audit of banks, it is something similar but bit more in detail. I'll tell you why. See, when I say non-banking financial company, okay, still it has very limited amount of transactions when it comes to a bank. Now think of a bank, okay, basically that is performing transactions and you are going to audit that bank. Number of account holders, number of transactions, real-time update, understanding the IT systems, the applicable requirements. Okay, so when it comes to the audit of banks, after NBFC, you can say two to three steps above, 2 to 3 level above. It comes the audit of banks. I will again discuss, as I always do. I'll again discuss with the example. I'll show you the report. Based on that, we will discuss. Okay. So based on that report only, we will discuss the audit of banks also. So that is your unit 1. Now, unit 1 comes to the special feature of audit of banks. Okay. Now, what I will suggest everyone is please download the updated study material. Okay, because there are certain amendments, and based on that you will be able to see the updated study material from the portal. So please download the updated study material and then refer that one. Okay, I have also taken the updated study material over here. So we will be going through your updated study material, and simultaneously we will be able to understand the how the things are given in the study material with respect to audit of banks. Along with that, throughout the session, I will also discuss about a particular publicly available report. Okay, so it is a publicly available data, again annual report of a bank. So we will also discuss that, okay, from time to time, so that you guys can have a clarity. Okay. Now, when it comes to the bank, can anyone tell me the laws or regulations that are applicable to a bank? So when you think about audit of a bank, which laws and regulations do you think will be applicable to a bank? Banking Regulation Act. Very good. Yes, Jenny. Apart from that, RBI Act, yes. Companies Act, very good. What else? Any other act? Do you think any other law or regulations? SEBI related guidelines? Yes, very good.
PAMA Act or Basel Committee.
Yes. RBI directions with respect to Basel III capital requirements. Anything else you might think? Okay, this might can this can also be applicable.
Money
Any
laundering.
hmm?
Money laundering.
Money laundering? Very good. Yes, very critical. Prevention of money laundering, PMLA. Anything other than that? Information technology? Yes, somewhere it might also be related. Now you can say personal data, DPDP Act, that will also be applicable to banks because they are collecting personal data. Okay, so when it comes to the audit of banks, it's not only we are referring to one particular law or regulation. Just like NBFCs, there could be multiple laws and regulations at play. Yes, Banking Regulation Act, RBI Act are the prime thing under which the bank might be working, but there are other laws and regulations also that are applicable. So accordingly, when we are performing the audits of bank, we have to understand from that point of view. Okay, which are the first step is to understand the business of the particular bank, what sort of operations they are carrying on, what they do, what kind of products they do provide. Generally, when you understand banks, what do you understand? You understand like, okay, uh, consumer banking, retail banking, commercial banking. Okay, you understand, okay, financing, providing financing. But it's not about only personal banking, financing, lending, investments, and all that stuff. There are more than that. There are things which are beyond than financing or personal banking. For examples, banks might be involved into insurance. Along with the insurance company, they might be have a tie-up with the insurance companies. They might manage pension funds like NPS things. They might be into alternate assets. Okay, multi-asset investments kind of thing. Okay, they might have international business units like banks operating outside India as an international branch. They might be involved into micro or microfinance things. A lot of things can be there. A lot of things. Okay, different type of products can be there. Various different kind of products. Stock broking. A particular bank can also be tapped with the stock brokers, or they can be kind of providing stock broking service also. So a lot of things can be there with respect to when it comes to the bank. Now, as an auditor, it is important for us to understand what all things or what all areas the bank cater to. What is the business? How the bank is structured? What is the basically the operations of the bank? How the bank is there? Plus, apart from that, very important aspect is the IT infrastructure. So IT infrastructure in the bank is to the next level. Okay, to the next level, because it is so much integrated. It is so much real time basis connected that a small error can create a big chaos. IT infrastructure, when it comes to the audit of bank, is the very critical aspects, very critical part. There are RBI directions, there are RBI regulations that that a bank has to comply with when it comes to the IT infrastructure. Okay. Even the auditors are also required to report on matters with respect to IT infrastructure. It's not like that, okay, auditors are not. Auditors are also required to report. So there is a master direction on the information technology, governance, risk, controls, and assurance practice for a bank. Okay. Over there, what is the bank is required to do with the IT infrastructure? What is bank required to do with the security risk management, BCP related things, information system audit, IS audits. Okay. So what is the IS audit? IS audit policies, how IS audit should be done, how internal audit function should help bank to perform like how the internal audit function should perform the IS audit. Who shall carry out the IS information system audit in a bank? Okay. So a lot of things are there when it comes to the information technology, governance, risk, control, assurance practice. Okay. Plus, there are other directions with respect to outsourcing IT related things. Banks, have a restrictions or they need to comply with the directions whenever they outsource any information technology service. Plus, apart from that, with each and every type of product, for example, let's say credit card, debit card, there are IT requirements involved. For example, digital payment security controls. There is a master direction on the digital payment security controls for the UPI related thing, for direct transfers. So there are again security controls required. So internal controls, security controls, IT infrastructures, these things are, you can say very top priority when it comes to the audit of banks. Yes, understanding the business is there, no doubt on that. Understanding business and its entity and its environment is there. But apart from that, prudential norms for the business, for the banks are still there. We will discuss prudential norms. Okay. We will discuss about capital requirements. We will discuss all those things. Perfectly fine. That is there. But apart from that, IT infrastructure, understanding the entity, the products and everything. And if I just show you one particular example of that, the criticality of the IT infrastructure, this is the independent auditor's report of a bank. Just don't go on the name. It's a publicly available data. Okay. This is the independent auditor's report of the bank. I'll go to the key audit matters. Remember, key audit matters means the matters which have which were of significance which had significance in the nature, very high risk of material misstatement and everything. Remember that? Now, if I go to the second key audit matter over here, it is nothing but your information technology systems controls impacting financial reporting. Although here we will report, we will talk about financial reporting, but again, information technology system with respect to financial reporting. Or you can say if a day-to-day operations also, because if there is any issue with the information technology systems in your day-to-day operations for a bank, it will impact your financial reporting. At the end, bank is dealing into financial matters. Okay. So, and just we will read this key audit matter for a minute and see what is auditor is doing against that particular area. The IT environment of a bank is complex and involves many independent and interdependent IT systems used in operations of the bank for processing and recording a large volume of transactions. As a result, there is a high degree of reliance and dependency on IT systems for the financial reporting process of the bank. They have, provided everything. Plus, see this one. As described in Note 21 of Schedule 18B to the standalone financial statement, a supervisory action was undertaken against the bank under Section 35 of the Banking Regulation Act by the RBI subsequent to the year-end diseases arising from an IT examination conducted by RBI, and the related reports containing its observation was issued by the RBI. Okay, some things have been there, but how auditor has taken the comfort, because at the end I am not modifying my opinion with respect to the key audit matter. So what auditor has done? Our audit procedure with respect to this includes in assessing the control over IT systems of the bank, We involved our technology specialists to understand the IT environment, IT infrastructure, and IT systems. Means kind of bringing auditors experts. We evaluated and tested relevant IT general controls and IT application controls for the in-scope IT systems. ITGC. Remember, we have multiple times discussed about ITGC. On such IT in-scope IT systems, we have tested key IT general controls, ITGC controls, program change management, user access management, deprovisioning, password management. Remember, you read this word, you hear these words in your study material, but in actual also we do this. In actual on the ground level, wherever the IT systems are critical, we do verify these things. Privilege access to the applications. Today, for example, I have the access to the banking system that I can do any type of changes in the accounting, in the transactions, or anything. Privilege access, super user access. That is very much problematic when it comes to the banking system. Okay, database related, other areas of IT control environment, business continuity, disaster recovery, backup management. So these are some critical areas when it comes to the IT in a particular bank. And that's why you see, this is there. This is there as a key audit matter paragraph. And not only over here, for each and every, like I would show you, if you see the consolidated financial statement and other subsidiaries of the bank, everyone will report this particular area as a key audit matter. Because by default, when it comes to the bank, it's a very critical area. Are you getting the point? So this is just to show you the criticality of the IT environment and internal controls when it comes to the bank audit. But if I have to tell you, how do we conduct bank audit, or what are the steps, or what are the basically things that we do in a bank audit? See, when it comes to a bank audit, first comes to the understanding the entity and its IT environment, internal controls. Then after that comes the requirement related to CRR, SLR, verification of assets and liabilities, NPA norms and provisionings, capital adequacy, and then other banking regulation requirements. If I have to place basically, okay, so I'll just write it over here in a hierarchy way. So the first and important point for me will be IT environment, plus your understanding of entity, and your internal controls. Then the next steps comes to the your various legal requirement. For example, your CRR, SLR, your NPA, then comes the verification of assets and liabilities. Okay. Then comes the capital adequacy. Then comes the various other requirements. Okay, other legal requirements. Then this is how basically comes, and then I will focus on the reporting requirements. Just like NBFCs, there are different reporting requirements when it comes to the audit of a bank. Okay, I'll just show you. So it's not only the the way the things are reported in a financial statement. It's not a the normal financial statement. When it comes to the bank, there are multiple reporting requirements. Now the financial statements, can anyone tell me what is the applicable financial reporting framework for a bank? Applicable financial reporting framework, quickly. From where the applicable financial reporting framework is coming for the banks? Anyone? From where do you think the applicable financial reporting framework comes? Which is the applicable financial reporting framework for a bank?
Regulatory, say like RBI regulatory.
Okay.
Or in
But
case of foreign companies, they have different regulators like RBI. उनका खुद का framework होता है.
okay. But any specific place from where there is this is coming, like for the companies we have schedule 3 here, like from where it is coming, where the format is given.
RBI Act 34.
Okay. RBI Act. Okay. Anyone else and with any different answer? Yes, Jenny, very good. Anyone? No? Okay. So you guys have correctly said that, okay, Banking Regulation Act. Correct. Absolutely correct. Banking Regulation Act. Some are saying third schedule the Banking Regulation Act. Okay. I'll show you a master direction issued by the RBI, which is under the Banking Regulation Act only. Okay. It is the Banking Regulation Act only. So basically, from time to time, RBI issues these master directions which summarizes the way of the financial reporting. So from where it is coming, I'm just showing you. Okay, this is last updated on 1st April 2024. This is the master direction on the financial statement and presentation disclosure. And this is basically applicable to all commercial banks, primary urban cooperative banks, state cooperative banks, and central cooperative banks. Okay. Now this is applicable to all commercial banks. Now, if you see, these are issued under section 35A and 56 of the Banking Regulation Act. This is where the particular reporting requirement lies, and over there RBI holds a power to issue the directions, and they have issued the direction that what should be the balance format of balance sheet in terms of section 29 of Banking Regulation Act. I'll just take you to the annexure 1. See, this is the format of basically balance sheet of a commercial bank, capital, asset, and everything. And simultaneously, we have this balance sheet available. See, this balance sheet is as on 31st March 24. See, capital, asset, everything in the similar way. Then you have a P&L related formats. Then you have a various schedules, specified over here in the balance sheet schedules. Okay, so this is the, you can say, applicable financial reporting framework that is there for the banks. Okay, which is specified under master direction, or you can say RBI specifies from time to time, which the banks are required to follow. Okay, so this is the you can say third schedule to the Banking Regulation Act, or section 29. Everything from time to time, RBI clarifies on these matters and what is the updated format. Again, you can say this is form set out in the third schedule. It is that, but in an updated way. So that is the first thing that we are talking about, the applicable financial reporting framework. When it comes to the financial statement of a bank, it is the, you can say third schedule, or you can say directions issued by the RBI. Both are same. If I show you in this also, it says that third schedule of the Banking Regulation Act, form set out in the third schedule, that is there, and that is updated from time to time. So that was first thing, that the financial reporting framework for a bank. Yes.
सर बेसल 3 के नॉर्म्स एप्लीकेबल होने वाला है ना, लाइक आई थिंक बेसल 3 के अकॉर्डिंगली हमें रिपोर्ट्स और वो अपना फ्रेमवर्क चेंज करना पड़ेगा, राइट?
Yes. So Basel 3 capital regulations are there. Okay. That is what you say. These regulations will be applicable. A lot of things are there in that, but yes, those regulations are there that will be applicable to banks. And that is more on to with respect to how the banks will comply with the capital adequacy framework when it comes to the Basel 3 capital regulations. It will have impact on the reporting side also, but not that much compared to the proper reporting that is being given in the third schedule or the master directions.
Okay, sir.
Yeah. So again, as I said, the financial statement for a bank are made up of multiple different kind of reporting sections. So you will see there will be specific reportings on the capital adequacy ratios, tier 1 capital, tier 2 capital. The way we have seen in the NBFC, similar over here also we will be having that. Okay. So basically, when it comes to the financial statement for a bank, it's not just one particular act. That is what we discussed in the start. It is not just the one particular act which plays an important role when it comes to the reporting part. There are multiple laws and regulations involved. Okay, when it comes to the audit of a bank, and that is where we need to understand what laws and regulations are applicable. Any doubts with respect to any of the point? Any doubt? No? Okay. Now, see what and how we will discuss the audit of NBFC chapter. Okay. What we will do is we will discuss the way the structure the structure I gave you. Okay. First, we will discuss what is the form and content that we discussed of the audit of banks. Okay. Then we will discuss how we perform the audit over here. What are the basic requirements when it comes to the audit of a bank? Okay. And then we will go to specific areas when it comes to the bank audit. So from general to specific, we will follow that methodology to understand the audit of banks. Now, when it comes to the, performing the audit. So as I said, the concepts that we have already seen when it comes to the acceptance and continuance, okay, understanding the terms of the audit engagement, understanding the audit engagement basically in detail, what is communication with the previous auditor, planning, everything, understanding your team's capability, competency, objectivity, whether you will be able to deliver the bank audit in a timely fashion, the resources required, that all concept, the initial considerations are as it is. There is something new that will come into the picture. Whatever we have seen, again, in the similar fashion will be applicable. What is the next step? Once you do the initial, considerations of the client's acceptance and continuance terms of audit engagement, what do you do next? Can anyone tell me? Quick recap of what is the next step in the audit after acceptance and continuance and terms of audit engagement. Come on, guys. What is the next step? Yes, Katie, audit planning. What do you do in the audit planning? Understanding the bank, its environment. Yes, very good. That we discussed in detail also. What is when it comes to the IT infrastructure, understanding the bank. Yes. What else? What do you do in your audit planning? Second, what do you do? What is the second step after the acceptance and continuance and terms of audit engagement? Anyone? Communication with the previous auditor. Okay. Yes, very good. So we do understand the bank. We do understand the entity, its environment, IT system, internal controls. You do understand the accounting policies followed by the bank. Yes or no? You do understand, okay, what is the structure, organization structure in the bank. You go and understand, okay, who is the managing director, who is the CEO, who are the audit committee, the board of the bank, everything. You go and verify those things. Yes or no? Organization structure. Then basically, after understanding the organization structure, after understanding the entity, its environment, its IT control, you go to the next step. What is the next step after understanding the entity and the structure and IT environment? What is the next step? Defining scope of work, risk assessment. Yes, very good. Very good, Monica. So once we understand the entity, once we perform, detailed understanding of the entity, we understand what are the risks within those processes. Okay. We go for risk assessment, risk of material misstatement, application of SA 315. We assess the fraud risk in a particular bank, including money laundering. Now, again, when I talk about a bank or NBFC, the fraud risk is always at a higher pace, at a higher pedestal. Reason because they are dealing into your financial things. They are dealing into financial sector, and in financial sector, the risk of fraud is always higher. Okay, so what is the auditor's responsibility with respect to the fraud when it comes to the audit of bank? What are the money laundering laws and regulations applicable to a bank? KYC norms, understanding the risk behind, you know, the money laundering, the fraud, the KYC, foreign transactions, everything. Once I do a detailed risk assessment, then I come to the next part. And which is that next part after the risk assessment? Which is the next part after the risk assessment? Quickly. Discuss the risk with team. Yes. What else? What is the next part after discussing the things with the audit team? Come on, quickly, guys. Communication with management. Yes. Respond the assessed risk as per SA 330. Very good, Jenny. Yes, absolutely correct. We will respond to the assessed risk of material misstatement. That is, we will perform procedures. We will perform detailed audit procedures. We will, establish the materiality. We will gather audit evidence. Yes or no? That you do after, performing the risk assessment. You perform the testing of control, test of control. You gather audit evidence. You calculate materiality, and then you finally go for collection of test of details, audit evidence through test of details. And after that comes the reporting part. Now here we have seen independent auditors report, the financial statement. But tell me one thing, is there any other reporting applicable for the bank apart from your independent auditor's report or financial statement? Or these financial statement that we have seen? Is there any other audit report, other form of reporting applicable to the bank, audit of bank? Yes, no, no, yes or no? What do you think? Is there anything other than this normal reporting? Is there any other reporting applicable? I think you guys have not read through the chapter then.
Are you talking about LAFR, long form audit report?
Yes. Yes. So that is also applicable. Yes or no? LFA or
Yes,
long
sir.
form audit report is also applicable for a bank.
Yes, sir.
Now, this particular, it is applicable to statutory central auditors, for the branch auditors, okay, for large and irregular and critical accounts, different for different kind of things it is applicable. So there are multiple sections in the long form audit report. Have you got any chance any time to go through the long form audit report? How many of you have seen long form audit report?
सर देखा है बट ओनली लास्ट में साइन करते हुए देखा विदाउट रीडिंग कि क्या मतलब उसमें इम्पैक्ट्स होंगे.
Okay, no issues, perfectly fine. But you have seen that particular report, okay? I'll show you. I'll show you a particular format that is there currently on long form audit report. Now, the basically the LFAR that I have is from. Just a minute. I have one particular format which is basically from 2020, and usually different sections are updated from time to time basis. So I have one from 2020 with respect to on this particular part. Let me show you, just a minute, it's taking time. I'm not sure why it is taking time. Just a minute. Okay. So basically, from time to time, RBI amends the format that is applicable for the audit of like in the format of LFAR, that is long form audit report. I'll show you the format that is there available. Now there are multiple parts, multiple sections which are there in the that are applicable in the long form audit report. Okay. Again, there are the report is basically different for different type of auditors. When I say different type of auditors, basically it is something, if that person is a central statutory auditor or a statutory auditor of a branch. So you have a different format or different reporting requirement when it comes to the type of auditor. See, So when it comes to the statutory auditors, statutory central auditors, SCA, they have to report as per the Annexure 1. There are things which are specified in the Annexure 1 on the basis of which they have to report. But more detailed reporting happens when the person is a branch auditor. So if a person is a branch auditor, he has a more detailed, reporting requirements. Like this is the just a format, okay, but it gets updated from time to time. This is just for your information, okay. So how does the bank system ensure that cash is maintained in effective joint custody? This is related to the cash. This is related to the bank with Reserve Bank of India. Money at call, investments for the branch outside India, points that the auditor has to. This is the applicable to branch auditor, okay, like valuation of those investment advances, okay. Then you have a details with respect to the accounts, list of accounts that you have examined during the audit, account name, balance at the year end, funded, non-funded, everything, okay. Then capital appraisal related things. Then you have documentation related thing, monitoring, review, supervision related things with respect to a bank, okay. Then asset classification, provisioning, advance, resolution of stress asset. Remember provisioning, we have seen asset classification. We saw SMA 0, SMA 1, SMA 2 in NBFC. Similar way it is applicable in the banks also. We have seen standard, doubtful, loss asset in the NBFC. Similar way it is also applicable in the banks. Okay. There are other classifications also. There are other, prudential norms for the banks. There are other things also that we will discuss, but I'm showing you a general example to so that you can have a good understanding. Accounts which are under insolvency, under credit scheme, okay. So non-performing NPA, non-fund based facilities, a lot of things are there that are required to be deposited. And now they have with respect to the liabilities like deposits or other liabilities, contingent liabilities, profit and loss account related things, general gold or books and record related things where auditor has to report, inter-branch accounts, multiple things, management information system, MIS related, okay. And there are some specific questions applicable to some specific branch dealing in foreign exchange, nostro accounts, okay. So these are specific questions where auditor has to report clearinghouse operations, okay. Then you have for the large irregular and critical advances, specific reporting for the large irregular and critical advances that the auditor has to do, branch auditors has to do in detail. So these are certain, reportings that are required to be done under long form audit report. This particularly, is divided in three sections. You can say one is applicable to statutory central auditors. We refer, or they are known as a SCA. Okay. Then it comes to the branch auditors, and then it comes to the reporting on the large, irregular, and critical accounts for the branch auditors. This is how the long form audit report looks like, and this is how things are reported in that. You have seen like how much detail it is, how much detail. So how much detail is required to be reported under this. Now, in a similar fashion, the way we have seen in the NBFC, till the time if you are not aware about the requirements that are required to be reported under this, if you are not aware about laws or regulations which are applicable to a bank, you will not be able to report on the matters which are there. For example, if there is a particular matter on the deposits, okay, or let's say for example on the cash, that for example, does the figure of the balance in the branch book in respect of cash which is ATM tally with the amount of balance with the respective ATMs. So the cash balance in the books for the ATM virtual versus the actual ATM cash. Then whether the insurance cover available with the branch for the cash in hand or cash in transit. So till the time you are not aware about these requirements, like what are the requirements, what is the minimum threshold with respect to the cash handling or insurance, or what are the other requirements with respect to the bank, you will not be able to report over here. So in a similar fashion, the way we have seen in NBFC, we need to first understand what are these requirements. And for that, we will go through some of the requirements of the prudential norms. We will go through the, some specific requirements with respect to the CRR or SLR related things. Okay. And then we will also simultaneously see reporting done at the various stages. So there is a question whether it is under special audit or available to general user also. Like, can you explain in detail what is that particular part? Like, available to general user means?
I wanted to ask that the independent auditor's report is available for the in the public portal also, so that everyone can see and read that. So this report also can be
No,
available.
no. These reports are generally not available. What happens is, I'll tell you how it works. So
Yes.
when it comes to these long form audit report, okay, they are prepared by branch auditors and they are shared with the statutory central auditors. And then the statutory central auditors combine the branch audit reports and then they prepare their own report, this statutory central auditor report in annexure 1 based on the feedback they have received from the branch. Okay. And on the basis of that, they report to the RBI and the supervisory board of the bank. So these are usually not available in the public domain.
Okay, sir.
Any further doubts? LFR also include information regarding subsidy. Subsidiaries, as in, can you explain like which subsidiaries you are referring over here, Preeti? Any specific requirements that you are looking for subsidiaries like that? Which information on the subsidiaries? No? Okay. Basically, when it comes to the subsidiaries, like it is either at the branch level or the central level. So you have multiple branches involved in this for the LFAR. I'm not sure about the subsidiaries that you are referring to. If you are referring to branch, yes. So each branch auditor has to prepare this. Any further doubts, guys, with respect to this? Any doubts? Am I audible to you guys? Okay, fine. So this is how a basic overview structure is there. Now area by area we will deep dive. We will perform understanding of some requirements, and on the basis of that we will discuss the how audit is required to be done in that particular specific area. Okay, from payments, from advance, from SLR, CRR, everything. Okay. But before that, let's take a quick 10-minute break. After the break, we'll gather back and we'll do the detailed discussion on the area by area testing reporting part. Let's take a quick 10-minute break. Thank you. Yes. Welcome back, guys. Now what we will do is we'll go area by area. We'll discuss some of the things, okay, some specific areas to the bank audit, and then on the basis of that, okay, we will understand how to do the audit over there. First of all, we'll start with CRR and SLR requirement. Okay, CRR and SLR requirement. Now, can anyone tell me what is the current rate which is going on for the CRR or SLR? Anyone? The current rate which is going for CRR or SLR? No?
The 4.5.
Okay. For CRR. And SLR? Okay. So CRR is currently at the 4% and SLR is the 18%. Okay. So this is the current rate which is going on. Now, each and every bank is required to maintain cash reserve ratio and this statutory liquidity ratio. Okay. Now, for this, let's say if we need to verify whether the bank is complying with the CRR or SLR requirement, what do we need to do? Sorry. First, we need to understand what is the requirement with respect to CRR or SLR when it comes to the banks. Okay, how banks are required to I'm sorry, how banks are required to calculate these ratios, because percentage is one thing, calculation of these ratios is another thing. Okay, so you might get percentage perfectly fine, you might aware about the percentage perfectly fine, but how to calculate over and above that, after that calculation, how to report. Okay, those are the things which are there, which are also very important when it comes to CRR or SLR. For example, there was one particular change in the CRR on December 6 itself. The rate was revised. CRR was reduced by 50 basis point in two equal tranches. That is, one will be applicable on 14 December, one was 28 December, making it to this CRR coming back to the 4% from 4.5%. Okay, so rate is one thing that from time to time we should be aware about what is the rate, what is the current applicable rate and everything. Now, second important part is that what are the other things with respect to the CRR or SLR? Number one, okay, I will also simultaneously, we will discuss from the study material, we will refer the study material also. So let's come to the page 14.21. Okay, now there are specific regulations, directions, cash reserve ratio and statutory statutory liquidity ratio directions 2021. Okay, so there are these CRR and SLR directions 2021, which are updated from time to time, basically, which specify that what is the requirement with respect to the CLR and SLR. Okay, now there are certain reportings that are required to be done by the bank with respect to CLR and SLR. So one such reporting is Form A, that is scheduled banks, scheduled commercial banks are required to report. There is a Form B written for the cooperative banks for the CRR. So Form A for CRR and Form A for SLR. These are the two, basic forms under which, returns statutory. These are the statutory returns which are submitted to the RBI by the banks from time to time. Okay, this is the reporting part this I'm talking about. Now, first of all, when we are referring to the compliance with the CRR and SLR, we need to make sure that first the reporting is done on a weekly basis, on a quarterly basis, whatever reporting requirement is there. Number two, how it is calculated. Okay, so there is a methodology given to calculate your CRR and SLR. Okay, whether that methodology is complied with or not, whether the way the bank, RBI requires calculating, it has been calculated in the way that it is there or not. For example, okay, for the CRR, banks, each and every bank is required to maintain cash reserve, which is percentage of its total net demand and time liabilities. So they have to calculate net demand and time liabilities, and on basis of that, they need to apply that percentage. Okay, and they need to make sure that on a average daily balance. Okay, and then this is reported on a every last Friday or every fortnight. Okay, based on the fortnight basis, the reporting is done on the Friday. So now these reports, basically maintenance of CRR or maintenance of SLR is sent by the auditor. So branch auditors are required to report whether maintenance of minimum CRR was done or not. Okay, on all the days during the reporting fortnight. So fortnightly reporting happens, and over there they are required to report whether on 90% of the days CRR was maintained or not. Okay. Same way, there is a way to calculate net demand and term liabilities. So we need to first of all understand what is the way to calculate that net demand and term liabilities. Okay, and then whether it has been calculated appropriately or not. Once this reporting is done by the branch auditor, the statutory auditor, central statutory auditor at the central level combines all the reporting, okay, verifies with the trial balance whatever data he has or she has, and then on the basis of that, they examine whether the bank overall was maintaining the CRR or SLR. Okay, so this is done on a fortnightly basis, and the reporting is done on the fortnightly basis. Now that was CRR. Now same way, there is a SLR. Okay. Now SLR is required to be maintained again, at a particular percentage that we discuss, 18%. Now there are eligible assets on the basis of which you are required to calculate SLR. Okay. Again, auditor is required to understand what are those SLR assets, on the basis of which 18% is required to be calculated. How to calculate those SLR assets, whether to include some assets or not. We'll not go into detail on that, but again, as an auditor is required to report whether that was maintained or not. Okay, so he has to test on a timely basis that, okay, whether the bank is maintaining the SLR, whether the bank has such SLR assets on the basis of which it is being calculated, and then according the reporting is done. So whether it's the net demand and time liabilities for the purpose of CRR or for the purpose of SLR, there is a way given, and then on a fortnightly return, that is either CRR written in form A or SLR written in form 8, it is done. And then auditor has to verify whether the reporting is done appropriately or not. Auditor, he himself is required to report to the central statutory auditor on the CRR or SLR. So this is how the reporting is done. And in order to examine, in order to audit, you need to verify these returns. Clear with this, with the audit of CRR or SLR? And the same is written over here only. Like for example, branch auditors to send their weekly trial balance on Fridays, okay, to the head office, so that DTL position can be determined for every reporting Friday. That is a fortnightly reporting. Okay. Then examine on test basis that the consolidation regarding the demand and time liabilities position. So the calculation here happens that, okay, what is the net demand and time liability, whether that is done appropriately or not. So that calculation is there. There are some inclusions, there are some exclusions which are given. Okay. So this is a list of some excluding from the liabilities, exclusion from the liabilities items given over here. Then whether interest has been calculated or not, interest on deposit, accrued balances. So how to calculate net demand and time liabilities for on a fortnightly basis, and whether that has been appropriately reported in that particular return, form A and form 8. Okay, an auditor has to verify that. So for the calculation of this particular demand and time liabilities, a detailed circular is there how to calculate that. There are penalties also involved. Okay, if the bank does not calculate, so whether the bank has accrued for those penalties or not. So everything you as an auditor you are required to verify. There are specific nostro accounts for which you need to consider when you are calculating SLR or CRR. So basically, if you want to audit this particular area, you need to have a detailed understanding of the circulars, detailed understanding of that particular requirement. Okay. Now that was with respect to one of the CRR or SLR. Any doubt with respect to that? Any doubt? Again, there is no alternate for reading. So after this, you have to go through and read that how the audit of CRR or SLR is done. In bank, each and every area plays an important role. They have a specific requirements for the audit of that particular area. As a result, your reading is necessary for that particular area. Clear?
Sir,
Yes.
here you have told the method for calculating CRR and SLR. Uh, as of I remember that in IPCC there is one chapter related to banking
Yes.
and accounting. Then we generally calculate the SLR directly by 25%. I think at that time it was directly from the profit and loss account at the end, यानी डायरेक्ट हम कैलकुलेट करते थे उसमें, ये यानी इतना प्लस माइनस नहीं होता था, तो यानी ये कुछ अलग है या ये वही है जो यानी उसमें वो कंपल्सरीली SLR कैलकुलेट करना होता था?
No, see, how it happens is from time to time there are changes in the calculation. Okay.
Yes, sir.
And even when I say scheduled commercial banks, regional rural banks, yeah, different times, different banks have, different requirement. For example, small finance bank or only payment banks. Now, things have evolved at a much larger scale.
Yes, sir.
So accordingly, calculation and this particular the direction that I'm talking about, okay, that has some specific inclusions and exclusions with respect to the calculation of SLR.
Yes, sir.
And you
Okay.
need to like follow for that. So again, the thing is that based on the entity that you are auditing, you need to understand what is the calculation requirements for them, and accordingly whether they have calculated or not.
तो सर फाइनेंशियल स्टेटमेंट में ये इसका अलग से कैलकुलेशन भी प्रेजेंट करते होंगे?
Yes, there is a separate presentation for that.
हाँ. यस सर. क्लियर सर.
Any further doubts? No? Okay. That was for the CRR and SLR. Now I'll come to the next part, which is with respect to the cash. Again, cash very important when it comes to the bank. Okay. Now again, we have already some reporting requirement when it comes to the cash. We have already seen, we have already seen reporting requirements with respect to your long form audit report. There is some already, reporting requirement over there, that what auditor is required to report. Let's first understand what are those, basic reporting requirement when it comes to the cash, and then we will see, definite specific areas with respect to the auditing in cash. So I'll go to the report. Okay. Now, when it comes to the cash, see what auditor is required to report over here. Does the system ensures that the cash maintained is in effective joint custody of 2 or more officials as per the instructions of the controlling authorities of the bank? Means, first of all, you need to verify whether there is a joint custody of 2 or more officials or not. Have the cash balances at the branch ATM have been checked at the periodic intervals as the procedure prescribed by the controlling authorities of the bank? So you need to verify, whether as an auditor, you are required to report on this particular part. But to report on this particular part, you have to perform some procedures. For example, cash balances at branch, whether they have been checked periodically. So it is asking to checked by some specific person, not by the auditor. So is there any control, like the way management inventory count control is there, then whether the cash count procedures, cash count things are there or not? Okay. Then, does the branch generally maintain or carry cash balances which vary significantly from the limit fixed by the controlling authorities? So each and every branch has been given a limit for the cash that they can maintain. Okay. And accordingly, what they need to do is, if they have a excess cash, they have to submit that cash to the head office or the zonal office. They have to deposit that cash over there. They cannot keep the cash in their branch. So whether they are maintaining and carrying the cash balance at that level. So from time to time, you have to verify that what is the cash balance for them. Okay. What are the limits for them? How much balance they are maintaining? Then, does the figure of the balance in the branch in the books with respect to the ATM tally with the amount of balance with the respective ATMs? So kind of, actual cash balance in the ATM versus book balance of the ATM. And insurance cover available with the branch for the cash in hand and cash in transit requirements. So whether, the bank has taken the insurance on the cash in hand or cash in transit. So to report on these matters, you have to audit. Like here, you will obtain, like, what are the cash insurance obtained by bank. Okay. For example, over here, ensure that the cash is maintained in effective joint custody of 2 or more officials. So we'll ask, okay, tell me who are those 2 officials? Okay. Who have the joint custody, whether they were present all the time or not. Let's say, for example, there were 2 officials whose joint custody was there on the cash, but one of the official was leave for 1 whole month. Then for that particular month, who was the another official? So you will verify these particular requirements, and then on the basis of that, you have to carry out the audit for the cash. Okay, this is how basic cash related audit you will do. Apart from that, okay, see, it is a cash. It's very, very important aspect when it comes to the bank audit. Okay, so you will periodically verify, bank does the cash count also. So the cash counts will be done on a periodic basis. You have to ensure that, those are the cash is physically verified or not, and it is getting tallied with the cash balance shown in the register or balance in the CBS, that is the core banking system. Okay, and if we go to the study material, it is same, like verify physical verification of the cash that we discussed, cash at the ATM and the cash deposit machines, cash in the register balance and the CBS that we discussed, So based on the reporting requirement, your auditing requirement also works in hand in hand. There is one doubt. What is the difference between scheduled bank and other banks? Difference, I would say there is a huge difference. There are multiple type of banks. Okay, commercial banks, regional rural banks, small finance banks, payment banks, local area banks, cooperative banks. So there are multiple type of banks. Okay, now each and every type of bank has a role to play. When I say commercial banks, they usually you see the banks, these are the commercial banks. But apart from that, there are the local area banks, urban cooperative banks, state cooperative banks, district central cooperative banks. I'm not sure. People who are into Maharashtra and Mumbai, they might be aware about Mumbai District Central Cooperative Bank, or each and every city has their district central cooperative banks. Okay, they have, for example, payment banks. There are payment banks in the market as of now. Companies are there, they are working as of only for payment. That's why they are known as payment banks. So there are various type of banks involved. Small finance banks, because they do the microfinancing thing. So each and every type of bank has a different role to play. What is meant by scheduled bank? Scheduled commercial banks means basically the banks which are commercial banks, and they are specified in the schedule in the RBI. So these are the scheduled banks because their name is mentioned in the schedule. That is why the term scheduled bank comes from. You can say the normal commercial banks are the scheduled banks basically. Okay. That was with respect to the cash. Any doubt with respect to the cash? Any doubt? Okay. Then same way you have reporting on the bank balances with the RBI. Okay. Now auditor has to also report on this. Branch auditor has to report on the balances with the Reserve Bank of India. So where the balance confirmation certificates obtained in respect of the outstanding balance at the year end, and whether they have been reconciled. For example, I am showing the branch is showing in the books that they have the balance with the RBI of 2 CR. But in the books of RBI or the statement of the RBI, the branch balance is only 1 CR. So whether these statements have been obtained or reconciliations have been done. Okay, observations on the reconciliation statements. Okay, if what was the observation of the reconciliation statement? Cash transactions remaining unresponded if there are any. Okay, revenue items requiring adjustments. Other credits and debit entries originated from the statement and provided by the RBI. Okay, so there are many these things, and reconciliations which are required to be done from time to time with the balance with the RBI. And in past also, I would say some of the frauds and scams were something related to these interbank balances, or balances with the balances of banks with the other other entities. Okay, so that's why it becomes important for the banks and branches to verify the balances from time to time. There are bank fund scams. There was a bank receipt scam in the past. So these areas becomes very important when it comes to the performance of the audit procedure. So you can search on the internet also about bank receipt scams. Okay, so fake receipts were there issued by by the bank officials and everything. Again, that includes your again, when I say balances with RBI, okay, in order to verify these things, in order to report these things, you have to obtain information from the particular branch. You need to obtain these statements. You need to see whether the reconciliation is performed appropriately or not. Okay, you need to see whether the adjustments are done appropriate or not. And on the basis of that, you need to report the points over here. Then comes the money at call and short notice. If you have taken any money at call and short notice, then you need to, perform the procedures with respect to that area. So I'll go to study material again. We'll discuss about the balances with other banks. Similar way, examine that no debit charge or credit charge for the interest outstanding is there. Okay, which was supposed to be taken. Any check outstanding, kind of any difference or observation is there. So you need to understand about the reconciling items which are there in the statement, and accordingly you need to understand whether the reconciliation is done appropriately or not. Any doubt with this? Kirti, I would suggest just for the time being, we'll park your question over here. I will discuss your question once I'll complete the specific areas, because I will tell you the difference between this particular type of nationalize or all those things. But for time being, let's first complete this part, and I'll take it at the end. Okay. So that was basically with respect to the balances with other banks. Okay. Then there is one specific area that I want to discuss is investments. Okay. Again, very, very critical area. Because what happens is investments are very critical when it comes to the bank, where the funds are going or where the funds are being utilized, how the valuation is done for the banks when it comes to the investments. And over there, you have a prudential norms also for the valuation of investments. Okay. Now, what is the requirement for the reporting? We'll understand with the reporting, and then we'll understand the prudential norms, and then on the basis of that, we'll discuss. See, what it says that in respect of purchase and sale of investments, okay, where the branch has acted within the authority, okay, so whether the branch was authorized to perform this purchase and sale, whether the branch has acted within the delegated authority, tomorrow branch can use the funds and can purchase anything because they have the funds. So whether they have purchased and sold the investment the way they were supposed to do within the authority, whether the investment has been held by the branch in its own account or on behalf of the head office, whether they are be available for the physical verification. Sometimes, there is a risk that branch may purchase investment in name of some other person. That is not appropriate. So whether the investments are held in their own account or on behalf of the head office or not. Valuation of the investment in accordance with the RBI guidelines. So RBI has given guidelines how to value investments, how to recognize income from those investments. Okay, again, those are part of prudential norms when it comes to the income recognition, classification of assets, okay, account with temporary differences, NPAs. Over there, RBI has given a detailed guidance how to perform valuation, accounting on those matters. And as an bank, they are required to follow, and as an auditor, we are required to understand whether bank has followed those requirements appropriately or not. Okay. Then whether there are any matured or overdue investments which have not been encashed or not been serviced, means there were matured or overdue, but bank has not encashed. They have not realized the cash from those investments. So are there any such investments with the branch? Over and above this, over and above with respect to that, auditors are required to review some of the policies. For example, investment policy of the bank. What is the investment policy of the bank? How and what things bank can do when it comes to the investment. Okay. So what is the objective? What is the authority given to the branch? What is the authority available to the head office? So everything is there in the policy. Usually there is a separate investment functions in the banks which monitor about those investments. Then there is a reconciliation for the bank receipts, counterparty bank receipts. Okay, it's very, very important. Okay, those reconciliations, because at times, in past there were frauds on the bank receipts and those general ledger, subsidiary general ledger or public debt office reconciliations. The examination of the documents of acquisitions or disposal of investments, not only the contract note but actual evidence of the investment being purchased. Earlier bank, there was one fraud where the bank was purchasing or selling the investment through brokers. Now broker in actual never purchased the investments, rather they only issued the notes to the bank, but in actual there was no investment in backing to that. So yes, there was such kind of frauds. So banks funds were used by the brokers in some other way, so something like that was there. So examination of the real documents, whether there is any real investment done by the bank or not, physical verification of those scripts are required. Okay, as a date of the purchase of those investment, whether the investment were purchased on that particular date or not. There are portals like eKuber portal or CBS portal from where you can obtain those particular statements to verify whether the investments are held in the name of bank or not. Classification of the investment. So there are multiple classifications. If you check for the classification of investment, they are held to maturity, they are held for sale. Okay, so different type of classifications are there. Now whether the investments which are available for sale, okay, or held to maturity, they are appropriately classified or not, because again these classifications have impact on the reporting. In your financial statement also, you report the investment in these categories. If I just show you example in the financial statement, so these kind of classifications are also reported in the financial statement. That's why banks, if the classification is correct, then only you will report correctly in your financial statement. Otherwise, how will you report? So whether the classification is followed appropriately or not, and these classifications again are on the basis of directions issued by the RBI from time to time. So based on those directions, basically, banks are required to classify their investments. I'll just show you just a minute. It is taking a bit time because documents are very heavy. Yeah. Let me rotate the page. Wait a minute. Let me rotate the page. Okay. See over here. Now these are various investment in India, outside India, that is being reported in the financial statement. And if you see, there are different categories involved over here. Held to maturity, available for sale, held for trading, total investments, and provisions in front of that. Okay, so till the time you are not aware, that if you are not able to verify whether this classification is correct or not, I will not be able to perform verification of this disclosure. So I have to be sure that this classification is correct. Like this classification which is done should be done appropriately. So the investment which was supposed to be classified for as held for maturity is held for maturity only. It should not be classified as a held for sale. Then the provisions on non-performing investments. Yes, there is a provision required for the non-performing investments. Okay, then whether these provisions have been made or not on these investments. Non-performing assets, something different. Non-performing investment, something different. So whether any provision has been made on these non-performing investments, and what was the requirement basically for of provision on these investments. So accordingly, you need to verify, you need to perform the audit. you need to perform the procedures. That was with respect to the investment. Now see, there could be multiple things involved, multiple type of investment can be there, so you need to go investment by investment, and accordingly you need to verify things. So just we will go through the study material quickly. Internal controls that we discussed, separate investment functions, yes. Examination of reconciliation, remember, bank receipts, general ledger, public debt office reconciliation could be a scam, past scam that we discussed. Examination of documents, physical documents, actual documents to demonstrate that there is a purchase and sale of investment. Physical verification, okay, if possible. Remember e-Kuber portal that I was talking about. Examination of classification that we just now saw. On the basis of classification, then there is a valuation required. Then only you will decide there is any provision required on the non-performing investment or not. Okay. Dealing in securities on behalf of others. If you are obtaining securities on behalf of others, then what are the requirements of RBI, how you are required to do the specific areas on that. So these are certain procedures that you are required to perform when it comes to the audit of investments. Any doubt? Any doubt with respect to investments? See, once you will read the chapter along with this, once you have the understanding, today, and after that, if you will read the chapter, you will come to know, okay, that we discuss in this chapter, that was also discussed in the lecture, and this is how is required to be done. So by reading plus by having an understanding now, you will be able to understand, okay, how the audit procedures are performed for specific areas. Any doubt? Any doubt till now? No? Okay. Now I would discuss another important area which is known as an advances. Okay. Now, what is requirement of auditing in case of advances? See, when it comes to advances is a very critical area, because it's not only involves your compliance with the reporting requirement, but it also a prime function of a bank that to advance loans to to customers. So it's a very critical area, very big area for the bank. Now again, when I say critical and big area, there are regulations involved, and one such regulation, the way we have seen in the NBFC, is the prudential norms. So basically prudential norms provides that how bank is providing advances or loans or cash credit facilities, overdraft, and everything to the customers. Agriculture advances, loans with moratorium period, a lot of things are there in the prudential norms, okay, with respect to advances. And for each and every category, there is a separate reporting requirement. There is a separate, requirement. For example, derivative categories. For example, asset classification, upgradation from NPA. So we'll discuss everything. Okay. Basically, I would first discuss about the asset classification in case of advances. Okay, or assets basically. Now, when it comes to the asset classification for the banks, it is same. The asset classification or for the banks works on the similar way that we saw in case of NBFC. Okay. In case of NBFC, the asset classification was your standard, substandard, doubtful, and loss. It is the same over here. So you have sorry, yeah. When I say asset classification over here, you have the same thing. You have the standard, substandard, then you have a doubtful, and you have a loss. assets. Okay. Now, how these are calculated? So, what was the requirement for substandard asset for NBFC in middle layer? Can anyone tell me quickly? Substandard asset, NBFC middle layer. Come on, guys. Substandard asset.
0.4%.
Huh?
0.4%.
No, not provision, but calculation. So, when I will classify a asset as a substandard asset in case of middle layer?
So after 90 days.
So when the asset is less than 12 months?
Not asset, but asset is a
Asset NPA, sir.
yeah. So asset becomes NPA after 90 days of being overdue, and after that asset has become NPA, I will take another 12 months, and that during the duration of 12 months, I will classify that asset as a substandard asset. So the moment an asset becomes an NPA, it is classified as a substandard for the period of 12 months, and after 12 months, it goes to the doubtful category. Similar concept is there. So if the asset NPA less than 12 months is a substandard. Asset NPA more than 12 months is a doubtful. And loss asset, the way it was there, external internal auditor, the same it is over here. And rest remaining is your standard asset. So whatever we understood, the same way applicable over here.
Sir?
Yes.
Whatever you are writing is not visible to us.
Sorry. Yeah.
Now yes, sir.
Yeah. Okay. So that is the same over here that we have seen in case of NBFC. Now, what is the requirement of NBFC? NPA was 90 days. Remember? NPA requirement was, that is, it is overdue for 90 days. Similar way, overdue for 90 days. Yes, it is the same requirement over here. But there are two other requirements. One was overdue for 90 days. Now, in bank, you might have different kind of products. So you cannot only say overdue. For example, how will you say overdue in case of a cash credit? CCOD. So there is no, time limit to pay the amount. That's why it's an overdraft or cash credit. So they work in a different way. So for cash credit, overdraft or cash credit, you do not use the term overdue. The term that you use is the out of order. So if it is out of order, okay, then it is NPA. Now to calculate out of order, again I use the time limit for 90 days, but I do not check overdue. I check that outstanding balance is in excess of your sanction limit. Outstanding balance in excess of sanction limit for 90 days. Plus, if the outstanding balance is less than, let's say, outstanding balance less than limit, but there are no credits. But there are no credits in account for 90 days. or not enough credit to cover the interest debited for 90 days. In that case, I will, say this is out of order. Again, the same 90-day limit is applicable. Now, this is, the NPA requirement. So once I'll understand the classification of asset classification, then I have to understand the NPA requirement. This out of order was something new over here. Now, there is one more important aspect that I want to discuss when it comes to the bank audit. Okay. And that is with respect to, you can say, classification of the asset based on, what do you say, borrower. Okay. Now, what happens is there are scenarios where, you have multiple asset or advances to a particular borrower. There are multiple advances or assets to a borrower. For example, Mr. A has term loan of 1 CR, overdraft of, let's say, 20 lakhs, okay, and a personal loan, not a personal loan, or you can say secured loan kind of thing, or you take it some other loan, okay, other loan or other facility of rupees 10 lakhs. Now there is a this particular overdraft over here. This is out of order and NPA. This is out of order and NPA. Now these two accounts are standard, no issues with that. Now the question is that how do you classify these other accounts also? Will you go with the same classification? One of the particular asset that is given to a customer is out of order or NPA. In that case, should I consider other assets or loans as a NPA? What should I do? I can say that okay, don't consider this as an standard, consider this as an NPA because your OD is NPA and the person is not paying amount over there, will not pay amount over here even though he's paying. Should I do that? Or should I continue with the standard classification because he's paying on the time to time? What you will do? Come on quickly, guys. There is, how will I classify this particular category? Let's assume the term loan payments are on time and other loan facilities are also on being paid on time. Now here in this particular scenario, the regulations come into the play. The regulation says it's a specific theme, the theme that is asset classification should be borrower wise. That means the moment I classified this as an NPA, I have to classify these two also NPA, even though they are being paid on timely basis. Therefore, all the facilities granted by a bank to a borrower, okay, will have to be treated as an NPA, irrespective of what is the current scenario on that particular area. Are you understanding the point? That is, asset classification in banks is required to be done as per borrower wise. Even though I say this asset is being paid on timely basis, still I will calculate that asset or count that asset as a NPA. Understood? Any doubt with this? Okay. Let's take up this example of Mr. A. He's very interesting guy. Okay. We will understand one more scenario. Let's suppose Mr. A, he's only having term loan, nothing else. For time being, term loan 1 CR. Now this term loan was NPA, that is overdue for more than, let's say, 8 months. Usually after 90 days it becomes overdue. It was overdue for more than 8 months. So by default it's a NPA and substandard asset. Okay. On one more thing over here is, that is outstanding principal and interest was rupees, let's say 5 lakhs, that was overdue. Okay. Now let's say on 31/3/2025, Mr. A paid all outstanding amounts. What would be the asset classification on 31/3/2025? Now on 31/3/2025, Mr. A paid all the amounts. What you will classify now? How you will classify this asset?
Sorry, standard asset.
Okay. The standard asset, very good. Okay. Any other answers? No? No other answers? Classify as a standard asset, very good, yes. Again, now over here there is one more concept, that is asset or account regularized near balance sheet date. Okay. So sometimes, accounts are regularized near balance sheet date, just to show that, okay, everything has been paid, now account is fine, so bank has not to report the NPA. Where these kind of scenario happens, that the account are regularized on a balance sheet date, the auditor has to be more careful. This is the classic scenario of accounts that are regularized on balance sheet date. So the auditor has to be more careful, and auditors have to obtain. So there is a specific requirement. I can only say this is standard asset when banks submit a satisfactory evidence about the manner of regularization. Means on receipt of satisfactory evidence about the manner, like how it has been regularized, the manner of regularization. Okay, the account can be classified as a standard. On receipt of the account, then only account can be classified as standard. That means you need to ensure, auditor has to ensure that, okay, no, This is not just, for the sake of, classifying the account as an standard on the balance sheet date so that, bank should report or bank has less NPA to report. But this is actual regularization. The person actually intend to regularize these particular, what we say, accounts. So that's why when I say satisfactory evidence, that is, auditors has to make sure that they are satisfied. That is this particular regularization on near to balance sheet date is not, something different. It's not, creating doubt. It is not, of unusual nature. Like there is, like for example, this person is already doing default in other banks, but it is regularizing in this bank. So there are evidence available. There is a data available which is showing, that the person might not be able to continue to be a regular, regular paying person or customer. So accordingly, this account classification is required to be done. Clear with this? So this is known as a concept of the requirement of account regularized near or about the balance sheet date. So whenever we come up with these kind of scenarios with respect to NPA in case of a bank, as an auditor, we should be aware about like, okay, what is the requirement from the auditor? As an auditor, what we are required to do? Any doubt? Any doubt, guys? Okay. Now, another example, I'll take it. Okay. Let's say there was a, loan which was given under the consortium. Have you heard about consortium arrangements? Where multiple banks come together and loan to a particular individual for some particular or a particular company for some particular project. So there is one lead bank and there are other banks involved. So how consortium works is, let's say for example, bank A, B, C, D. Let's say B is a lead bank who is driving all the, things over here. Like all the banks together, they loaned or they, provided a loan to, let's say, ABC Limited. Okay. Now, what happened is ABC Limited defaulted on payment of term loan. So there is a default of principal and interest of rupees, let's say 5 crores. Now, when loan is given, what happens is, usually in consortium system, what happens is, there is a lead bank, let's say bank B. I pay interest and principal to lead bank, and then lead bank, distributes that amount to other bank because loan is given by each and every bank. Let's say loan is of total rupees 50 crores. Okay, and let's say A bank has given 10 CR, B has given 20 CR, again C has given 10 CR and 10 CR. This is how structured. That's why as a B bank is a lead bank. Now, when this 5 CR or principal or interest is paid to B bank is a facilitative bank. Okay, who takes the interest or payment or installment payment and distributes among all. Now, let's say there is a default. Okay, and this default was such a default that that account was NPA and NPA for all the banks. Now, what happened is that individual member, that here, let's say here ABC Limited, okay, Now here ABC Limited, okay, decided, okay, no, let's do one thing. Let me pay the amount. Okay, let me pay the amount. So ABC Limited paid this overdue amount to lead bank. Paid overdue to lead bank. That is B. But lead bank is yet to transfer share to other bank. Okay, lead bank has received this 5 CR, but other banks are yet to receive their share from the lead bank. Now, here, let's say principal outstanding, principal and interest outstanding was rupees 1 CR. You, as an auditor of a bank, will you call this particular outstanding amount as an NPA? So the question is this an NPA? Because the amount has been paid to lead bank, but lead bank is yet to pay this 1 CR. Well, bank B is yet to pay 1 CR to bank A. ABC Limited has paid that amount. Are you understanding the example over here?
सर आई थिंक सो ए बैंक जब तक मनी रिसीव नहीं होती तब तक एनपी ही शो करेगा. जिस समय मनी रिसीव हो जाएगी उस समय अपनी बुक्स के अंदर से एंट्री डिलीट करेगा, मतलब रिवर्स करेगा.
Absolutely correct. Yes, I will not treat this account as an standard asset or performing asset. I will still continue to treat this account as an NPA. Reason because bank A has not received the funds. Again, regulation comes into the play that till the time bank receive their money, they have to classify the accounts NPA, irrespective whether the customer has paid or not. So let's say customer paid, but somehow bank has not received the money. I'll still say that's an NPA. So there are different scenarios. There could be different scenarios which can be applicable for the advances, and accordingly we need to understand whether the account is an NPA account or not. Now, once you decide whether the account is an NPA account or account is not an NPA account, then the purpose here was to make you understand, okay, there could be specific scenario which can impact on the classification of an account being NPA or non-NPA, or performing or NPA. Now the moment there is an impact on classification of NPA or non-NPA, the impact will go over this classification. Tomorrow if I classify that account as an performing asset from NPA, it will go into the category of standard asset, and this will impact on the provisioning requirement. So on each category of asset, you are required to make provisions the way we saw in the nbfc. Similar here, it is applicable. As a result, my NPA classification will have multiple impacts. So that's why it becomes critical for me in each and every stage to classify the accounts appropriately. Okay, now let's understand what is the provisioning requirement basically over here. So when it comes to the provisioning requirement, what was the provision required for the loss asset?
100%.
100%. Okay, so the requirement for the provisioning requirement for the loss asset was 100%. Similar way, for the loss asset, it is 100%. Doubtful asset, what was the requirement for doubtful?
3 categories, 20, 30 and 50, I guess.
So it was 20, 30 and 50, and for unsecured 100.
Yes.
Correct. Over here, the numbers are different. So over here, it is same 1 year, 1 to 3 year, and more than 3 years. But the numbers are like 25, 40, and 100. So 25% up to 1 year, more than 1 year, 40, more than 1 to 3 years, 40%, beyond 300%. 20, 30, 50, instead of here we have 25, 45, and 100. And if it is unsecured, directly 100. So if it is unsecured, directly 100, and this is for the secured portion. 25, 40, or 100. That is up to 1 to 3 years, more than 3. Substandard asset, what was the requirement for substandard provisioning? NBFC?
0.4%.
No. Substandard. It was 10% over there. Correct, Ginny? Here it is 15% in general. So there are two rates over here. One is the 15% general rate, and for unsecured portion, additional 25% of the balance. Or sorry, additional 10% of the balance, making it to 25%. So in general, you are required to make 15% without any securities or anything. But for the unsecured portion, 10% additional to make it 25% for them. Clear? So that is for the substandard. Any doubts till now? Now, what was for the standard? What was for the standard? .25. Yes, very good. Similar way over here, housing loans, agriculture activity, SME loans, they have 0.25. So here it is, more diverse. For some category you have 0.25. For some category you have 0.75. For some category you have even, ranging up to 5% also. If they are restructured and classified as a standard, so there might be 5% on standard. Some has, other loans has general 0.4%. So, different rates are there for the type of loans on the standard.
This is the totally different from NBFC loan, sir.
On standard, yes. Because in banks, you have multiple type of, loans and advances. That's why it requires a different type of provisioning, each and every. So let's say for example, your commercial real estate, that has 0.75%, because it's a real estate, bit of more risk. If it is, let's say for example, you know restructured loan, sometimes what happens is there is a restructuring. If there is a default, customers are not able to pay, then they restructure the loan. Okay, and based on the restructuring, they start paying back. Now at the time of after restructuring, those are considered as a standard, but there is a more risk because there was a default in past, so they have a 5%. Now if the commercial real estate is there, plus there is a commercial project with respect to the loan, not the residential loan, means you are giving loan to the a company for the real estate, but for the residential, then it is 7.5. If it is for commercial, then it is 1%. So different rates are there for different type of loans and advances.
तो सर इसमें कोई ऐसा स्टैंडर्ड नहीं है, यानी जैसे कि ये एक पर्टिकुलर टाइप के लिए पर्टिकुलर रेट दिया हुआ, अगर उन सबसे हटके एक अपने को जनरल रेट
0.4.
0.4.
So general rate is 0.4. Like if it is not following any specific category, then 0.4 general category.
Okay, sir.
Like if it is a medium enterprise, if it is some standard loan not following any other category, I'll go for 0.4.
Yes, sir.
So this is how provisioning requirement works in case of a bank.
The question related to the provision requirement comes in the exams. Generally comes in exams.
They do. Reason because at the time the question can be, okay, for example, this is how bank has calculated provision on a particular asset. Okay, you as an auditor, you are required to verify whether the calculation or whether bank is appropriate with respect to the classification of an asset or calculation of the provision. Could be there.
Okay, sir.
So basically, see, you as an auditor are at the end, while I'm discussing these points, I'll show you. Now, again, we will go back to the reporting part. Just a minute. So, yeah. Now advances. See, for advances as an auditor, we are required to report on certain matters. For example, on the large advances, excess of 10 10 crores or 10% of aggregate outstanding balances. What was the scenario on those advances? Okay, plus whether provision has been made on these accounts or not. For example, I'll go to the NPA one. So there's a separate NPA, reporting requirement. This one, asset classification, provisioning of advance, and resolution of stress asset. Now, as a branch auditor, I have to, specify. I have to report that whether branch has identified and classified advances into these categories through computer system or without manual intervention. Okay, whether this SMA 0, 1, and 2 classification followed. Okay. Now, then again with the list of accounts of large advances, then whether the RBI guidelines on the income recognition and provisioning has been followed. I can only comment when I'm aware about at what rate I'm required to make provision. Restructuring. Now see, one more thing I'll show you. Upgradation in the non-performing advances in line with the Reserve Bank of India norms. Upgradation at the period end, at the balance sheet date, whether the auditor disagreed with the upgradation of the accounts. So if you are aware that there is a specific requirement that when NPA accounts are upgraded to the normal accounts or performing accounts at the balance sheet date, then we are required to take some additional evidence. Then only you will be able to report on that whether auditor agrees or disagrees. Okay, so each and everything that we are discussing, some way or other way, it is related to the reporting part. As an auditor, you are required to report on these particular areas. Even when it comes to the consortium of loans, there's a specific reporting requirement. When it comes to the valuations of the securities, okay, there is a reporting requirement. So all these things at the end goes to the reporting, and that's why it is necessary for us to understand what are the regulations and directions applicable to the bank with these areas. So I think in the intermediate also you have, or in the IPCC also you have already seen the calculation of provisions in the chapter of bank. So again, you will not, that's why you might not able to find these rates, but these rates are already discussed over there.
Yes, sir. Over there, these rates were present in the module.
Yeah. So in a similar way, see, if they were discussed over there, like it will be expected that you should be aware about these rates.
Yes.
Any doubt with respect to advances? Any doubts?
Sir,
Hmm.
if Mr. A, who taken loan from any bank, and he go become NPA,
Hmm.
and he came to the bank after many of years, uh, say 12-13 years, यानी बाद में आता है, जब उनके पास यानी अगर वो उतना अमाउंट एकत्रित हो जाता है ना, तो तब क्या बैंक कोई लीगल एक्शन लेगी या फिर उसको एक्सेप्ट कर लेगी सिर्फ?
Again, that depends upon the type of bank, period of default, and how much amount is involved.
ओके सर.
Even type of, the advance is there, like and why there was an NPA. See, there are NPA is one thing, overdue NPA is one thing, but another aspect is why it become NPA. Whether it was just because of the financial condition the person become insolvent, or there was a fraudulent activity attached to it. So there are multiple things that are required to be seen before you, like, bank can accept this particular amount.
ओके सर.
So let's quickly go through this particular part from the study material. See, classification of the provisioning, classification and provisioning that we discussed, okay, in detail, like whether there is a classification done through CBS without manual intervention. Now we saw in the report also, okay, classification made by the branch is appropriate, the way we saw, secured, unsecured portions, so that you can calculate appropriate provisions, NPA calculation, compare the date for the NPA, okay, accounts regularized near balance sheet date. Just now we discussed this particular example, okay. Then drawing power calculation for the out of order accounts, what was the drawing power. Again, account with temporary different deficiencies, if there are temporary deficiencies, then that should not be more than 3 months older, or there is some specific requirement, like to determine the drawing power, statement should not be older than 3 months. Otherwise, it will be considered as an irregular account, and then it will go into the cycle of NPA. Limits not reviewed. If there are limits which are not reviewed for more than 180 days, okay, that account is required to be considered as an NPA. Multiple type of scenarios are there, as I was discussing, for classification of an account as an NPA. Asset wise, asset classification, borrower wise, not facility wise, that we discussed. Okay, government related advances. So if government advance becomes NPA, then how to recognize income on that. Agriculture advances, provisioning requirement towards standard assets, the different categories that I showed you. Restructured advances and their provisioning requirement. If there is a restructuring, then standard asset may attract 5% provisioning requirement. Upgradation of the accounts, sale purchase of NPA, that is done by the banks. Banks at times sale or purchase NPAs because to manage their credit exposure. So what is their requirement? So these are the things that, as in with respect to an NPA, an auditor is required to verify. Okay, so that was with respect to NPA. Any doubts? Any doubts till now?
सर एक जनरल केस है जो सब फेमस केस विजय माल्या का। सर उसका जो एनपीए है वो लॉस असेट में क्लासिफाइड हो चुका है, देन फिर भी और वो आरबीआई ने सारा रिमूव करवा दिया बैंक से, जो भी मतलब मेन लीड बैंक इसमें शायद एसबीआई था। तो वो रिमूव होने के बाद में अब अगर रिमूव वापस से रिकवरी अगर होती है तो वो कैसे सेट ऑफ होगी और किस तरीके से आगे अकाउंटिंग होगी उसकी?
See, again, your principles of or the prudential norms come into the play. Without going on to comment on the case, I'll comment more on the prudential norms. See how prudential norm says with respect to the income recognition in this scenario. Okay, so there is a specific requirement in the norms which say that for the NPA, you are not required to recognize income till the time you have recovered it. Once you recovered it, then only you can actually recognize income. Similar applies to in this case also. So I will only recognize income when I have actually recovered it in the hand.
तो
Otherwise,
बट
I'll
उसको
not.
तो लॉस असेट करके पूरा वाइप ऑफ करवा चुका है आरबीआई। उसको
Yes.
100% प्रोविजन बनवा चुका है। 100% प्रोविजन मतलब कि पूरी एक तरीके से वो असेट खत्म कर चुके हैं। देन अगेन वापस से उस असेट से अगर कुछ इनकम होती है तो वो वापस से रिकॉग्नाइज कर सकते हैं।
See, now there is a difference. Having provision and writing of NPA both are different. The moment I have a provision, balance is still there in my books of accounts, but I have an NPA. I'll just show you an example. Not this one, sorry. I'll go to advances. Yeah, non-performing or non-SLR quantitative disclosures. I'll show you one disclosure, and then we'll discuss so that you can have. Yeah. See, classification of advances in provision held. If you see, I do still have this balance in my books of account over here, opening balance, total NPA. Then there is an addition over to it, reduction over to it. Now, reduction can be on upgradation, recoveries, technical and prudential write-offs. But having provision on an NPA is different. I may have an NPA in my books of accounts. I may have a loss asset in my books of account. That is another story. Okay. And having a provision, that means I still have a balance on my books of account. The day I will recover the balance, I will reverse the provision. Simple as that. Written off is something different. There is a detailed process on how to write off NPA from the books of account.
व्हाट अबाउट द एनपीए अगर राइट ऑफ कर दिया और उसके बाद अगर उससे इनकम जनरेट हो गई है तो?
Again, there are separate guidelines issued by the RBI on this particular aspect. It's not that much, I would say straightforward, but here we need to understand why it was written off, how much it has been recovered, and whether it was usually what happens is sometimes it is written off, sometimes it is sold off. So we saw selling of NPA. You might read about securitization of the assets or companies into securitization, that they purchase the non-performing assets from the banks and they try to recover it. So there
Yes,
are usually in the market we hear the term write-off, but in actual write-offs are very less, very less. And actually what we do is we actually transfer the asset, we banks sell the asset to these companies. So this is how actually in on ground it works. I hope I'm clear.
yes sir.
Any further doubts? And if there is a write-off, and even though if I say, let's say there was a write-off done, okay. Now, out of the write-off, there has been a recovery. Then there is a separate disclosure for that. So I'll show you. See this one. Opening balance of technical and prudential write-off as on April. That write-off which was done. Okay, additional write-off during the year. And then you have a recoveries and reduction made from those write-offs. So you have to report that this was the technical write-off, and then this is the reduction and recoveries from the write-off. So it's very different when it comes to the write-off. You know, there are a lot many reporting requirements on that.
Got it, sir.
Any other doubt? Okay. If no further doubts, I think there are some doubts. Okay. So thank you, Rini. Thank you very much. Okay. One doubt was there. This is with respect to nationalized bank. Again, you know, nationalized banks, there is a schedule for that. Okay. So if those banks are, you know, mentioned in that schedule, you can say nationalized bank in simpler terms. If I talk about nationalized banks, that's you know, the term is there. So there are total 19 nationalized banks with basically, okay, public sector banks and some others. So there is a specific category. If the RBI classifies that as a nationalized bank, then that will be a nationalized bank. Okay. If no further doubts, then what I propose over here is, in the next lecture, I will continue some portion of the bank audit, and then we will start the next chapter. Okay. But I will also take up some questions. So predominantly, we will target more on the questions part in the next chapter.
From Harshad PC.
So in the next session, predominantly, we will target on the questions part more. Okay. And then we will start the new chapter. So I want every one of you to read the chapter, unit 1, unit 2, both, so that we can discuss questions, we can solve questions, and then we will proceed to the next chapter. Okay. So if no further doubts, then I would say thank you guys. Thank you for participating in today's session. Thank you. And I'll see you in the next session. Yes, sir.